right, looks like President Trump does want the Venezuela oil model for Iran. Complete control, et cetera, et cetera. Welcome back, former Energy Secretary Dan Brouillette and Art Laffer, former Reagan economist and advisor, and Steve Moore, host of More Money on WABC Radio, among his many other credits. Dan Brouillette, start with you because I guess in an interview with the Financial Times, left-wing paper that it is, nonetheless, Mr. Trump talked about the Venezuelan model of controlling oil money, and oil disbursements, Dan Brouillette. I wanted to start with that because when I saw that, I said, yes, finally, the cat is out of the bag. That's exactly what has to be done here. General Keane told us at the top of the show, that they're already well on their way to reopening Hormuz. I'm going to come back to you on that. But how about the Venezuela model? What you make of it?
I think it's perfect, Larry. I mean, the president understands something Washington hasn't understood for quite some time. You control the energy, you control the market, you control the oil, you control the money, you will control the outcome. Every major geopolitical fight that the world has seen in the last century or so has been determined by who controls the energy. The president, I think, understands that very clearly, and he's used Venezuela as the model, and I think it's a perfect model. You remove Maduro, you capture the oil, you monetize American leverage there. He didn't nationalize the oil company. He simply monetized the leverage. That is the model that we need to use going forward.
And I think, I think they're getting very close. I think the military is getting very close. General Keane described it to us. We heard some of it on the Sunday talk shows from retired General McKenzie, who used to run CENTCOM. They know what they're doing, Dan Brouillette. They've been planning on this for many, many decades, and they've already started to take over the Strait of Hormuz through military action. If they need troops for landing, they'll use them, Dan.
Yeah, that's right. I mean, it's the only weapon that Iran has at this point. It's a choke point in the Strait. Missiles get the headlines, Larry, you know this, but barrels determine the outcome. As I said earlier, it's really going to depend on who controls the energy, and that's, again, something the president understands very, very well. So I applaud him for taking this approach toward the Iranian oil. I think it's a great model. We're going to see a successful outcome from this, would be my guess.
All right. Art Laffer, I want to come to you on oil prices, what these barrels of oil are fetching. But first, let's hear a little bit of tape from the late, great Fed chairman. Here it comes.
Inflation expectations do appear to be well anchored beyond the short term. But nonetheless, it's something as we will eventually maybe face the question of what to do here. By the time the effects of a tightening in monetary policy take effect, the oil price shock is probably long gone.
All right. So with all that gibberish, Art, what Jay Powell is trying to say is he's going to look through the oil shock and the market's been very worried about the Fed raising interest rates, as you know, and bond rates have been rising recently, and stocks have been falling because of that. So Powell may have gotten it right one time in a row, eh?
Yeah, he may have. I mean, what you do see is that the rates have been following actual market rates. When they raise rates, it's been well after the rates are rising, Larry. The Fed has been a following indicator all the way along, and always has been, by the way. And when you look at oil prices today, I mean, I don't know what it's closed at today, $105 or something like that. It's been much higher than that in recent periods. In fact, from 2010 to 2014, it was always higher than that. So this is not something new. Just steady as she goes is what I think we should do here. And I loved Dan's phrase, missiles get the attention, but barrels determine the outcome. I'm going to use that quote, Dan. I'm going to steal it right from you. Thank you.
You can have it.
We're all going to steal it. We're all going to steal it. Steve Moore, how about a genius idea from the Democrats? Let's have an excess profits tax on oil and gas companies. Terrific idea, no?
Yeah, I think I seem to recall that worked really well in the 1970s when we had, by the way, back then, Arthur, as you know, in real terms, oil prices were a lot higher under Jimmy Carter than they are today as well.
That's right. That's correct.
Just let the market work here. As soon as we get the straits open, I'm going to predict on your show we're headed right back down to $50 a barrel. Dan Brouillette may not agree with me on that, but I think the world is awash in oil. This is a very temporary situation. And the last thing I'll say is, look, I'm in favor of U.S. controlling the Venezuela and the Iran oil, but let's give the money to the citizens of Iran. Let's give the money to the Venezuelans so that they have a future.
Yeah, but Stephen, the Democrats in America want to put a tax on oil and gas companies, and they want to give it to the government, not the people. I thought you'd have something negative to say about that. You used to be against the windfall profits.
It's only the second worst idea I've heard in the last week. The worst idea was Elizabeth Warren's massive tax on leaving America. If you leave America, she's going to tax you at 40%, Larry.
I've heard about these wealth taxes that are cropping up in Washington State and New York and Chicago and Illinois. Wealth taxes, Arthur. Let's punish wealth.
Well, it's crazy because it doesn't even raise revenues. As you know, the wealth taxes don't work. If property taxes, when you raise property taxes, which is our wealth tax here, obviously property values fall by more than the percentage increase in the tax in the tax on property values. So, you know, it's just a deadly losing game. And California will find that this one's really bad, and they're going to be in deep, deep trouble if they do that. All the evidence says you raise taxes on wealth, you destroy wealth. And if you destroy wealth, you destroy the economy, prosperity, and growth.
And Arthur, by the way, every single country that has tried a wealth tax, all the European countries and so on, every one of them has abandoned it. Russia abandoned their wealth tax.
Oh, stop that, Steve. I hate it when you use facts. I hate it when you use facts. It's not fair. These other guys, I love to live without facts and without thought. Then you can have dream policies that never work.
Dan Briette, is the oil situation loosening up or not? In other words, we're hearing that Iran is letting now 20 oil tankers go through the Strait of Hormuz. I don't know whether that has any impact on the world's supply and the world's demand. Maybe that's a signal. President Trump seems to be looking at it as a negotiating signal. Then I read that I was surprised Iran stopped oil going to China, which has traditionally been an ally. What is going on in the Strait of Hormuz now? How do you read that?
Well, I think it will start to loosen up. And look, Steve, I agree with you completely. I think it's going to be in the mid-50s, you know, somewhere around mid-50, maybe 60, but it's going to collapse pretty quickly if the strait opens up. And I do think that, you know, what's happening is that we're starting to see some of the oil come out, but it's not enough to make a difference in terms of the global oil price. I mean, you know, Iran produced roughly 2.5 to 3 million barrels a day. Again, as I said before, we produce 106 million worldwide every day. So these little drips and drabs coming out of the Strait of Hormuz are not going to matter that much. But look, I think I agree with the comments that were made earlier about the wealth tax. I would suggest, too, that California has a wealth tax in place on refined gasoline. And we're starting to see that, you know, move people out of the state of California. I mean, if you look across the country today, what is it, $3.80-something cents or $3.30, I think, in Kansas? It's roughly $5.80 in California for refined gasoline. The same oil market, the same oil markets that we have to deal in, the same country, different policies. And these are Gavin Newsom's policies, and I think voters are starting to notice who made them.
All right. But by the way, California used to be a terrific oil gas state, and they have fabulous reserves onshore
as big as
and
Texas.
Offshore. If only Mr. Newsom would open it up. Anyway,
Larry, why did the Democrats hate wealth? Why are they against economic success and wealth? I don't understand these people.
I know.
What's wrong with getting rich?
Don't blame me. I have been a Democrat for over 50 years. Dan Briette, thank you. Art Laffer, Steve Moore, you're all terrific. I appreciate it, gentlemen.